So first and foremost, as always, I always like to welcome everybody here. My name is Sean Kozak. I am the CEO of Tickblaze. I'm privileged to have my entire team here today. I've got Jim, I've got Pete, I've got Jeff, the dream team, the trading team. I think Jeff Zimmerman's in here somewhere. I just don't know. Maybe if somebody can bring him over as a panelist, that would be great. I think Jim Swing or Jim Simmons can do that here. Jeff's here. We can bring you over. Give me one second. He's the head of R&D, so it's always nice to have him here when we do the Q&A. It's always good to do that. So we're going to be recording this event. Okay, we're going to go over Q&A at the end of the presentation. Obviously, I want to get through this and get into the details because it's going to be better on the demo. And then we'll spend a lot more time at the end of the presentation so you guys can get all your questions answered. Okay. If you can't stay for the entire webinar, no worries, guys. We'll send you out a recording. And yeah, let's get into it. So we've been talking about liquidity sweeps for a long time and, using them in conjunction with other strategies or just understanding what they are. But liquidity sweeps can be done in many different ways. They can be used on bigger time frames, smaller time frames. They can be used as reversals or with trends. And once I started to actually see the power of how sweeps were behaving, that's when I really started taking a deeper look on how we could bring this into automation, right? Normally, we don't like to automate systems unless we can see something of really strong merit. And we're really, really glad we did, because obviously we wouldn't be here today if we didn't think that it was really, really awesome. Okay. Now, when it comes to liquidity, a lot of people don't understand what that actually means. They hear the term and they understand it to just be just a word that gets talked about, right? However, liquidity is actually what makes the market move from one point to another. Okay. And so we're going to show you how this system has been built, what it's doing. And what's unique is that you're technically entering when everyone else is getting stopped out. like, like you've probably all heard of that, in that you want to get in when everyone else is kind of getting out, kind of speak, and vice versa. Well, that's exactly what this algo has been designed to do. It's been designed to enter trades after most of the market's been flushed in the opposite direction. And when used with custom bar types and directional trading, we've found it to be extremely successful. Okay. And so we're going to get into this. Now we're going to talk about how we use the algo engine as well to optimize the performance for better stats. And we're going to show you that here today. Okay. So yeah, exactly. Sharpshooter says, target the newbies. So we're talking about trading here, everybody. We're talking about automated systems. We're talking about performance, trades, all of that. I can't guarantee anything. I wish I could. I wish I could promise you the heavens and give you a genie and you can rub the lamp and just have whatever you want. But this is trading, and that means there's risk, and there needs to be an understanding of that. I'm not here to give you advice, sell you anything that is to tell you what to do. If you are placing risk capital, do so at your own discretion, and past performance never guarantees future results. Can everybody take a second to look at this and just type a Y in the chat box so that I know that you've read and understand and accept this disclaimer? Okay. Great. So how many of you guys have been with me when, I wear many hats, right? You know me as the CEO. We have a prop firm. We're deploying technology for brokers and prop firms. But how many of you guys have actually traded with me? How many of you guys have actually been in a trading room with me? How many of you guys have actually watched a live stream with me? How many of you guys have actually listened to the way I trade and the way that I talk and the way that I break the market down? Okay. What would you say is a big component to the way I like to look at the market? Like, how would you guys gauge me, right? Like, what would you say? I'm not just my performance, but me as a trader. What do you normally hear me say that is big? I'm big on, right? Like Todd says, time in the market. I run Prez says risk management. Okay. What else? Anybody else? Sharpshooter says you're just real. I'm just a deep trader. Disciplined. Ben says, okay. Okay. Data is a big one. Yes. Okay. I'm really big on just not bullshit, right? Like I'm just really big on, like, trading has already got so much bullshit packed into it and so much people out there selling the sizzle, but nobody really actually just goes into, like, does it actually work? right? Like everybody's got the next best shiny object or the next best indicator, or they got the next best course. What I care about with automation is, does it actually work? And can you deploy it in real time and it actually makes sense? And can you trade it live and it actually does what it's doing in the back tests, right? Which is important to me as a trader, because not all strategies are created equal. And you didn't come here to just buy a nice image of a nice strategy looking nice. You came here because you're looking for a strategy that's actually going to deliver and do what you're here to accomplish. Does this make sense? Give me a yes if that makes sense to you guys. Would you agree that that makes sense? Like, performance is above all else. Simplicity comes next. And can you actually replicate it? Because if you're a really experienced trader and only 10% of the audience can actually do what we're doing, well, that doesn't make sense for everybody. Okay. So I promise you this. Everything about today's presentation will be about no fluff, no BS. Performance is definitely at the forefront of what we're doing. But I'm not going to waste your time, because this is so simple and yet so effective that when you automate it, you can see the magic happen. Now, I know a lot of you are probably struggling. I know this because we see a lot of the stats on the back end of running prop firms, and we actually see how well traders do versus how well they don't do. We also understand the growing pains that traders go through. But if you're here to change that, this may be the solution that could be the differentiator between you becoming someone who gives up or actually deploys something that has the potential to change your trading business. Okay. So how many of you guys are open to trying something new? How many of you guys are open to something that actually works and actually something that can be deployed without a lot of change, right? You don't need to be doing a lot of testing. You don't need to be doing any remodeling of the strategy. You just plug it in, use the bar types that we're looking at, and Bob's your uncle. Yes, that's why we're doing it on Renkos, because you don't need to make any changes to what we're doing. Like gold and the NASDAQ are incredibly solid markets for what we're about to show you. Why? Because they trend heavily. Okay. Give me a yes that you want something exciting. I want to know where you're at. Now, we're not going to spend too much time on this, but I do encourage you to take a picture of this. If you're new to automation, hands down, it just makes more money than discretionary traders, period. Like, I'm not going to argue with you. I'm not going to try to tell you that's my opinion. That's a fact, right? If you take 10 traders and you pair them up against algorithmic traders versus discretionary traders have an edge, but it takes a very long time to sharpen that axe. Okay. And automation can do what you can't do. Like, you're not going to catch every trade. Automation will. You're not going to see things. Automation will. You're going to be faster with automation. And you also have the data. One of the things that I'm a big component of, and a few of you mentioned this earlier, is data, right? Like, if you don't have data to back up your strategy, then why would you even consider trading it? What I'm going to do is I'm going to show you the data over the last several weeks and months of trading the system. And I'm going to be honest with you. Like, if you're going to have two traders, and I always do this example, and I say, okay, well, give me 250 trades. Can you show, if I'm a manual trader here and I'm an algo trader here, if I'm a manual trader, can you actually sit down and show me 250 trades that you've logged, journaled, you have the stats on? Some of you could, maybe less than 3%, less than 2%. But if I came to you say, hey, can you show me your strategy? And you say, oh yeah, I use this indicator and I use that strategy, I use this cost layer, and I put this time frame, and holy shit. Well, show me your stats. Well, I didn't log them. I don't have a journal. I reset the account. So you don't have the data. Okay, that's fine. Over here, this algo trader, he didn't even have to trade. He didn't even have to place a trade. Can you show me the last 250 trades? Sure. If it's looking like this, okay, at least we have evidence that in the past, it did a hell of a lot better than 95% of manual traders are ever going to prove with regards to data. So if I was going to bet my business on running a strategy in live markets, okay, am I going to want to take a gamble on this guy, or am I going to want to take a gamble on that? and I don't like to use the word gamble, but I'm using it as an analogy. Okay. What would you rather base your business on? Data or I think this might work? You tell me, where are you guys at? How many of you guys would choose the A over the M? Just type an A or an M in here. If you choose A, just put A. How many of you guys would want data to inform your decisions, to give you the what? What is this going to give you? What is this going to provide you? An edge, okay? Yeah. What is it also going to give you? Confidence, yeah. It's going to give you more confidence. It's going to reduce your fear. It's going to give you more optimism in how you approach your business. Let's face it, guys, trading is a difficult business and every day is different. So if I can increase my edge, improve my confidence, reduce my fear, and make me more calm because I have data, wow, man, like, isn't that a blessing? Like, I don't know, like, what a concept, right? What a concept. So let's talk about this. How clean is that chart? Like, just tell me how clean that chart is. You tell me, is it clean or not? Yes or no? You got a couple lines, really nice, easy to see bars, two EMAs. Clean. All we're doing, all we're doing is we're identifying when the market sweeps levels of liquidity and gets us into a trade. Now we have some logic. Okay, let me explain this. We have some logic. This is a nice long trade here. Okay, this was on the NASDAQ. Okay, we have some logic here around what happens on the sweep, right? So if we have a level, we have logic that we don't just take trades way down here and that's not a sweep. We have logic that requires certain price action to happen on the level. That's important, right? So what happens at these levels? Market's going up, market's going up, market's going up, market comes down, sweeps and push. So this level is based off of the swing size. So let me explain something. There will be times where you have really big swings, and there'll be times where you have very tight swings. So depending on how we test the setup, how you optimize and how we build the swings, price action is really critical here because you could have a wick down here, and we've seen really good results, including the wicks. We've seen extremely good results, including the wicks, which I didn't know before. Even me as a trader, I would never trade the wicks. Now I'll trade the wicks because I have the data that shows that the reversals on the sweeps trading off the wicks are just as profitable, if not more, than just trading off major structure. Maybe it's because the market can see the major structure, but a lot of traders can't see the wicks, and it becomes really, really sexy trade locations, right? We've also tested the ability to take really tight stops. We've tested tight targets, big targets, really sexy stuff we've done with this system because it's so easy, right? Now, here's a great example. Red background, clear as day. Market puts in a level, sweeps the high, price came up, sweeps, winner, winner, chicken dinner. Comes up. See, there wasn't a sweep here. There wasn't a sweep on this high. It's just because of the zigzag strength that we're using. Price came up, hit the level, push down. Nice trade. Okay. Now, okay. Does everybody see these trades? Like we're not using some fancy high frequency trading logic, and we're not using some hocus pocus. This oscillator needs to be set by a 9 smooth and it's got to be used on 3 times. No, guys, no. Like, liquidity sweeps are about understanding structure and then why the market does what it does around that structure. Let me give you an example. If I'm trading down, okay, and the market did this, remember, we're trading price and time. And so when the market made the impulse leg down and came to here, that mean that there was enough sellers at this price level to hold the market there. This sellers held the market here. What that means is that whatever orders were sitting above here, there wasn't enough strength to trade into them. And so what that means is that like when this market traded down here, push, 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 at this time, there was enough orders in the book to hold the market down. So when the market came back up, these orders here are two things. They're stop orders getting triggered, and they're resting orders that needed to be filled that was still above that prior level. It's a combination of stops and entries all at the same time, which is why sweeps become so powerful. A lot of traders that are trading a trend down here, okay, a lot of traders see the impulse leg, they push in, oh, and they get in short here. They're putting their stops here. Absolutely they are. Plus whatever orders are still above there that we're pushing the market. So it's a combination of both working in your favor when we take these trades. So what we do when we build systems is we define the logic, and that logic is what we call the strategy, okay? And this strategy is, you know, we define the logic. So that's the sweeper, okay? Put that here. Okay, right there. So that's the sweeper. But then what we do is we run it through a series of tests to build entry logic, stop loss, targets, when we're going to trade the system, are we going to use money management? And then all of these are filters. These are all directional or non-directional filters. And so what we do is once we define the system and the setup, then we plug it into our core testing engine, we merge the code, and then we start running it through a bunch of optimizations and a bunch of scenarios and stuff. So that way we're not just trading it blindly. Like how do we know which swing strength we should be using? How do we know what the offset should be? How do we know what's the targets? How do we know how big of a stop loss? Like these are all, you shouldn't be guessing about these things. These should not be a guessing game. Strategic algorithmic trading is about understanding why you do things because the data backs up the decision, right? So what we do is we run it through this entire process. And then ultimately, these are all the settings that we go through in building this, okay? And I'm going to do this tomorrow. So what we normally do in these algo launches is today is a primer of the setup. We're going to talk about all of this. There's the entries, there's the stops, there's the targets, there's the time, there's the money management, there's all the filters, okay? And so what we do is normally today is the webinar, and then tomorrow is the AMA. And what we're going to do in the AMA is we're going to walk you through how we set this all up. And I'm going to show you how we configure the strategy and how we test the strategy. It's too much for 1 hour on a webinar like this, but it's definitely good for a follow-up session. How many of you guys have been in the AMAs before? Type a yes. For those of you that have been here before, did you enjoy it? Many of you, eh? Yeah. Yeah, they're really, really good because it teaches you how to really take the wheel by the horn and really maximize the efficiency on these things. Yes. Great. Okay, great. So we're going to be going into the deep dive on that tomorrow, but let me explain this. The reason we do this, okay, and the reason we do all of these is because I could take the strategy, okay, and I might get this. Right? I might get that. By using the proper criteria, I can find this. And there's a big difference between finding this versus curve fitting. So we're going to talk about curve fitting. The cancer to automation is curve fitting your strategies. You can't do this. So what we don't do, and what I don't like to do when I run my testing, is I don't like to do things that don't make sense. Let me explain something. If blocking lunchtime is something you normally do as a trader, then that's not curve fitting. You could take out those time windows because that's how you do things. If only trading the US morning session is what you do, then just putting the strategy to that is fine. You want to make sure also, like one of the things that we had to test when we ran this through the strategy optimization was we were getting extremely good results with really small swing settings. And then when we looked on the bars, we said, well, wait a second. How does it trade in live markets? Because it almost seemed too good to be true. Like, you know, sometimes you get these results and you're like, wow, like, is this real? Like, is this actually realistic? So what we do is we set it up in live markets and we run it live and we're like, holy shit, like it's actually doing what it's, that's when you know you're not curve fitting the strategy. So one thing I need you to understand that Jeff and I do with our team is we're not in the curve fitting business. We're in the making sure that when we optimize strategies, it's logistically sound decision making. Does everybody understand that? Because you could really, really do yourself damage by trying to remove all of the losing trades and make yourself give you the perfect back test. And then you go to trade it, and then that's not how you trade. So please note that if you're going to really expect good results and something that is something you can be happy about and proud about, don't try to make a strategy look like this in an unhealthy way. If we can get the strategy to do this in a proper way, that's a really, really good thing. Does everybody understand? How many of you guys agree that that makes sense? Type a Y in the chat box, because there's nothing worse than lying to yourself. Okay, perfect. So we're all on the same page here. That's fantastic. Great. Okay. So liquidity sweeps, we're going to go into this. Just take a screenshot of this, guys. There's a whole bunch of cool shit that the software does. We're not going to get into this. This is really just a slide of just features and stuff. We're going to do this on the charts. We're going to talk about all of the money management and the trend filters. We've pretty much already discussed all this, but the key thing here is that it runs fully automated. It automates your entries, your exits, your money management, your risk and reward. It does literally everything. Okay. The big thing you want to know that this strategy is only built for Renko charts. Could you use it on range charts? Sure. I would just want to make sure that you do it on range charts that are larger, because you're going to get more range bars than you will on a Renko chart. Does this make sense? Make sure that it's a Renko powered system. You could use range. Okay. And we have not tested it on variable range bars. Okay. So please know that. It's very important you understand that. Okay. So take a look at that. This is what we call a double sweep. This swept two levels, 1 and 2. And the reason it's a double sweep is the bar is encapsulating both of those levels simultaneously. Okay. Does everybody understand that? So how many of you guys think that that's pretty clean, right? You've got prices trading up, pulls back, hits the level, reverses. Good. Could you have gone for a bigger target here? Sure. You could have definitely done that. But you know what? Instead of thinking, well, I should do that, let the strategy tell you. Let the strategy tell you. Here's another great example. Okay. Here's another great example of this. And yeah, here's a great example of the strategy pulling off in great trades. It's just so clean. Like, it's just so clean. Yeah. No, we're not just using 34 and 55. So we actually have different settings for different markets. We found some pretty good criteria on that. Yeah. So that's a great question, Todd. For those of you that are actually trying to do this manually, we've actually found better results with different size EMAs and stuff. Yeah. Yeah. And with lots of data to back it up. Okay. So here's a great example of a really clean trade, right? You can see here, shorts and longs. Like, what's nice is that this is just going level to level. Like, you're trading level to level as long as you're on the right side of the momentum. You can get trades. It really is just like, you get a really good short, push down, you get a really good long, trade up. I mean, we were very pleased with the results on this. If I were, I don't like to say this because sometimes people say, oh, well, I don't know if I believe it, but I honestly have moved my preference into this type of trading just due to the fact that it's easier. Like, there's a lot of strategies out there that, we have that are very good. Like, we know this. We have a lot of them, and we have a large user base of traders that trade different systems. I see this better. Like, my mind personally as a trader sees these levels better. Like, I can see the trades, I can understand the trades. I'm not just, and it's not, you can contain the risk to a specific setting with this type of trading. Whereas sometimes trading the one and done or opening range or trend breakers or any of these different, like, you have different risk parameters that may or may not be familiar with this type of strategy. Your position sizing is fixed on every single trade. Your risk is capped. So you understand the execution, you understand the logic. So as a day trader that wants really clean execution and somebody that understands just money management and just proper trade planning, it's sometimes really, really nice to trade a strategy like this over some of the other systems. They're easier, they're better to model, and it's just cleaner, right? And for those of you that want more than one trade a day, like, yeah, like not everybody just wants one trade, right? Some people want more trades, right? Does that make sense? Take a look at these trades, really clean. Take a look at these, really, really clean. Like these are back-to-back sweeps, right? Came down, swept it, came down, swept it. Now this almost would have failed because if price trades above the level without reversing near it or at the certain proximity of the settings, right? But I mean, you guys can see it. I mean, there's like a market here, perfect target, done, right? It's really, really clean, really, really clean. Okay, let's go into it. So I'm going to play a video here. There's no audio to this. This is literally us filming it live. Like we film this live. This is not market replay. How do I know it's not market replay? Because Tickblaze doesn't have market replay, right? Like we haven't finished the development on that yet. So this isn't us cherry picking. This is literally us turning it on, running it on live. This was yesterday. Jeff, I think this was yesterday. Yes? I think so.
Yeah, that was yesterday.
Yeah, you traded yesterday. So you guys want to see us running this strategy live? This is forward trading. This is not, this is not this is not a back test. Okay. This is live, us running the strategy live. Okay. So we're just going to play it. You guys can see it. So this is it just live. Now he sped up the video because we edited the video. Because obviously we're not going to sit there and wait for the video. Like there it is, sweeping the low, right? Market's reversing on the sweep. There it is, executes along. Now, take a look at where the stop is here. See where the stop? There's the entry. There's the stop loss. We have results that tell us, the data tells us that you don't necessarily need to put your stop down here, down here, down here. We have really good data that says put your stop tight. Why? Because it gets good momentum follow through. You don't need to, and this is the benefits of algo trading, is it tells you where you can have better results without guessing where your stops and targets needs to be. And let it go. Sweep levels draw in real time. You can see the levels there. You can see the trade before it happens. What's nice as an algo trader, you'll be able to see the trade before it actually executes. There's the trigger. If it pops up here, we're going to get the long, and there it's violated. So you're not going to get a trade here. We traded through that level, didn't get the reversal. Let's wait and see if we get a long here. Okay. If it trades above on that sweep level while the EMAs are in our favor, there's the tight stop. There's the target. Really clean entry. Boom. Executing on the levels. It's sweeping. Boom. Target. Very clean, very easy. How many of you guys can see this? Give me a yes. It's crystal clear. Okay, now we're going to do another example later in the day or whenever Jeff filmed this, but this is live trading.
Yeah, there was about 45 minutes with no trade, so I just cut that part out. We didn't want to sit there and watch it.
Sure, yeah, no, don't need to be watching paint dry. Yep. So clean, sweeps the level. Boom. Now you could get a lot more out of that trade, but I wouldn't try to force it. I would let the data speak for itself. We have a lot of results with quick in and out trades. Better results, better stats, a lot more data behind it. Scalping. You're not trying to capture the whole leg. You're trying to capture winning profitable trades. That's just the difference between algo traders and just discretionary traders, always trying to catch the big home run all the time versus just catching profitability. All right. You can see it just executing, just takes the trades. Like this is as good as it gets, guys. This is forward trading in live markets yesterday. Yeah, and that's it. We're just showing different trades. I mean, it's gold was really good. Like it was just how many of you guys think that that looks clean? I know I keep asking that, but it's very, very super, super fun to be able to see this. Yeah, exactly. So how many of you guys want to win a free license? How many of you guys want to win a free license? Yes. So why don't we do this before we do the who's got the license draw link in here? Is that Jim?
Yeah, I got it.
So while you're doing that, I'm going to do the demo, and that way we can kill two birds with one stone.
Cool.
So these are the results of the NASDAQ and gold, and just, I've got a portfolio on the right. So these are the results of the last month of the sweeper. And what's really unique here on the one on the right, this is a portfolio. So you're going to see here, I actually have 3 strategies here. So one of them is with a 0.5 target. One of them is with a 0.75 target. And one of them was with larger targets, 1.5. So I'm testing 0.5 R multiple, 0.75 R multiple, and 1.5. Okay. Now, what I'm going to do is I'm going to show you the difference between the 2 strategies, and then we're going to talk about why this is insanely important. Okay. Now, let me explain this. We're going to turn this off. Going to refresh that data. So that was the 0.5 strategy results. You see this? So this was the results of 0.5. Okay. This was 1, 2, 3, 4, 5 weeks, the last 5 weeks. Does everybody see that? Had a couple red days, but when the market's really moving, wow. Okay. Like really, really good. Now, let me explain this. This is 0.5. Okay. Now let's go and let's test the larger targets. This is a larger R multiple. Okay, let's refresh it. That's the larger R multiple. Okay, so this was 1, 2, 3, 4, 5 weeks. Does everybody see that? You're catching bigger days because you're getting bigger targets, right? You know, these are big days. Okay, now this is trading 2 contracts on the minis, 2 contracts for the NASDAQ. These are only 2 contracts. 2.5 is 0.5 target, 0.5. So I'm risking $1 to make 50 cents. This one here is 1 to 1.5 R multiple. The one before that is 1 to 0.5 R multiple. Okay. So now what we're going to do is I'm going to show you an example of the next one. This one is my favorite. It's 0.75. 0.75. So I'm risking $1 to make 0.75. This is just up and to the right. And I'm not blocking any times. I'm not going in and getting fancy, right? But I mean, this is trading 2 contracts on the NQ. Every trade is 2 contracts. Okay. And, you know, let's go in and actually take a look at the data on this. Let's go in here and let's take a look at the data. So let me explain something here. Why do I get excited about this? Okay. So if I'm looking at the 0.5 target, okay, 0.5 target. What stands out to you guys on these? We're going to go through one at a time for a second. Okay. What stands out to you guys? Let me just maximize this for a second. What stands out to you guys when looking at this information? I just want to ask you guys if you guys can see it. It's the last 5 weeks of trading. Okay. 75% win rate. Okay. That's important because we have a 0.5 R multiple, right? You need a higher win rate. Okay. Profit. Net profit percentage, okay, yeah. Drawdown is small. You know, net profit is good, right? Like you can understand that, right? Like that's important. But you like the MAE and the profit factor, very low drawdowns, yes, okay. But what do I always tell you guys? Like if you're gonna trade something, what do you need? Like as a day trader, what do you need? Data. Okay. So what does that mean? That is the most important thing. You do not want to get all sucked into the profit factor and the drawdowns and this shit that everybody's minds gravitates to. Because what if you had that on 10 trades? Would you trust it? What if you had that on 50 trades? Would you trust it? This strategy alone, since August 27th to the 30th, okay, I didn't run the data. I didn't have it loaded. I just loaded from the other computer. But from the 30th, okay, so 5 weeks, that's 287 trades as a day trader. What's really unique is that the ratio to long and short is balanced. Why is that important? Right? Because when you think about this, okay, when you look at this, the short and the long have different relationships. It just have to do with conditions. But what you want to pay attention to, okay, is this data being paired up against a large sample size? Let's look at the other one now for a second. Let's just look at the bigger risk reward, which is this one here. This one is larger targets. Okay. This one here has a lower win rate. Important. Okay. Look at the difference between the trades. Like this is a 0.5 target versus a 1.5 R multiple. Way less data. Okay. Way less data. Does that make sense to you guys? So I'm just explaining to you the difference between scalping versus intraday swing trading. Now let's go to the next one, right? Which is my favorite. My favorite, and I'll explain why it's my favorite. Because I have way more data and I have better performance. So I actually have 330 trades in the last 5 weeks on this. That's insane, insanely huge data sets, which means I'm looking at a ton of data intraday, regardless of condition. And I'm able to look at the statistics on that. That to me is more valuable than the statistics, because everybody wants to have, they want to have this and this for money and that, but on what? Because if you try to do that on small sample sizes, I wouldn't trust that. And that's why when you combine just this alone is 300 and something trades. Like that's incredible, right? So when you think about the daily results on this, let's take a look at the time of day, the period breakdown. This is important to me. That's all I'm doing. I'm not doing anything fancy. Look, I didn't cut out these losers in the pre-market. Why? Because I'm not trying to curve fit. I started at 8:30 in the morning. I got 27 winning trades in the last 5 weeks in the pre-market. That's important information, right? I got 27 trades in the pre-market. So if I was just trying to curve fit my back test and remove the 9 losers, right? Well, then that's what I'm saying. Like you don't do that. But I didn't cut out any time here. Like this is the entire US session. Isn't that when 99% of all US traders in the United States are trading the NASDAQ? Yes or no? That's amazing. We're not trading the full day. That's the morning. 300 trades in the morning. That's when you know you have solid sample size. That's when you know you have something that has been battle tested. I always get a kick out of seeing all these people post shit on X and quant traders and developers posting things, and they've got these strategies and they show the data, but they don't have any sample size. I said, well, how can you trust that? Right? Like I'm a stats major guy. So it's my favorite study, right? Like studying mean reversion and coefficient of correlations and shit. Like that was just, my brain goes into that. Right? So as a detailed guy, if I'm going to provide you with something to trade and you're going to use this to your business, if I show you a green chart that goes up and to the right, you're going to say, well, okay, but can I expect to do that? Right? And that's important. Now, let's go in and take a look at some of these trades. And then we'll go take a look at some of these other markets. Gold's critically good. Like gold has great results too. We're going to talk about this in a second. How many of you guys are excited? I'm excited. This is an amazing system. This is just next level, right? Look at that. Like that was the last day. Like just now you could trade this. Like that's the starting time to the ending time. The starting time is here. Right? Like take a look at the amount of trades you get. Like you're just trading the liquidity. And you could have put in a money management filter here that wouldn't have captured the rest, right? After you make a certain amount and you pull back 10%, shut the trades down. But I don't know. I don't like to do that. Like I like to just let it run. Like let the strategy run. Give me the full period of sample size. I want to take a look at what the data is showing me, right? Let's just go back day by day, right? You can take a look here. Like take a look at the morning run on this. Like the morning run on the strategy. Like that's sexy. I don't care what anybody says. From 9:30 to 10 in the morning, right? That is sexy. Now, okay, you gave some back here. See what I'm saying? Like you don't have to trade all day. You could put a high water mark in here and you could say, okay, if it pulls back, 50%, I don't want to take it. But like, I don't know about you, but a lot of traders are done in the morning, first hour of the day, first half hour of the day. You could trade from 8:30, right? Starts here, right? If that's 8, that's, just right before 9 o'clock. That's 8:30 going into the morning. Boom. That's incredible. I don't know. I get excited about this stuff because this is my style of trading. I love scalping, right? And like, here's the thing, right? You don't have to just trade all day. Like if you make a certain amount of profit in a day, like if you make a couple $1,000 or whatever, right? Like you don't have to trade all day. Like maybe you have a daily goal and you just trade it and that's it, right? Here's a day, here's a day where, just maybe it didn't go so well. I mean, that happens, right? Like you're not going to have perfection. Okay. Take a look at this. Like this was a day where there was a drawdown, right? Like that's okay. Right. And then you have other days that just go up and to the right, up and to the right, up and to the right. So you got to understand that not every day is going to be perfect. But when you have sample size after sample size of the winning profitable days, there was a losing day. Okay. There was a losing day. That happens. Okay. That actually will happen. I promise you this, you may have a losing day. Okay. You may have a losing day. But if we look at the data, turn the thing off during news. What do we see here? Do you see a pattern of the losing days? This is a break-even day. We'll just call this a break-even day because it's just insignificant. But still $2,000. It's not insignificant. It's not insignificant. Let's just talk about this. Remember, let's go back to this being 2 contracts. So if you just wanted to do this with 1 contract on the NASDAQ, right? 1 contract on the NASDAQ or 10 micros, okay, whatever your fancy, just cut that in half, right? So this is a $12,000 day. That's a $6,000 day on 1 contract. Like that's not easy to do, guys. The baseline here, if we look at mean reversion, you got 10, 10, what is it? 8, 6. Okay. So you're like 10, 10, 8, and 6. So if you take an average baseline here, your low range across the threshold across all weeks is $2,000 days trading 2 contracts. You divide that by 2. If you're trading 1 lots, those are your average days are $1,000 days trading 1 lots. Your average low mark, your medium days are $5,000 days, right? Your big days are $8,000 days trading 1 contract. Like, I don't know, for me, when I see the sample size on that, it just makes more sense to understand that, right? So if I'm looking at what I can expect, never mind the growth of the curve, I like to look at, that's my biggest day. That's my second biggest day, right? I like to look at these days, right? These days. Because those are the days that everybody's going to get on average. And then when these days happen, it's like, yeah, like what a freaking great day that was. And so when you understand the low, medium, and high sensitivity of your business, it's no different than building a financial model. If you're going to look at what's expected, right? I would say 10, 12 to 2, your midpoint's 4K, $4,000 average. Does this make sense? And that's with 2 contracts. So if you divide that by, you put that's a $2,000 average. How many of you guys would like to average $2,000 every day? Trading 1 lots, 10 micros. Come on. Like, you don't get that with all the other systems. You don't get that. You don't get that. You don't get the sample size. I got to go back. I love the opening range systems. I love the other strategies. However, if I want that much sample size, I got to go back months to get that sample size. Do you guys understand that? That's the key. I get passionate because very rarely does these types of systems present themselves. That's why Jeff and I spent so much time on this. Let's go and take a look at Jeff's templates because he did pretty darn good with his templates. These are the NASDAQs and gold. So let's go back over here and just take a look at the NASDAQ. This is Jeff's template. And this is from the 4th. So 1, 2, 3, 4, 4.5 months, 4.5 weeks. Okay. So this went all the way up to yesterday. Yeah, that's the 3rd. That was yesterday. Day before. That was yesterday. So today's Thursday. So that's Wednesday, Tuesday, Monday, because I think it was a holiday. So that's half day trading. Anyways, I don't know. Jeff's template looks pretty damn good. Like 2 losing days. Yeah, in 5 weeks. His high days were 10K. His average baseline is 4K. How many contracts is this, Jeff? I didn't check. Do you know?
I think it was risking $1,000.
$1,000 a trade. Okay. So here's the thing. Okay. I don't know about you, but that's pretty damn good. Like, so even if you're risking $500, you just cut that in half. 10K becomes 5K and 5K becomes 2.5K. Like, I don't know about you, but like we're not over leveraging here on the NQ. This is amazing, right? Jeff is in, not Jeffrey. Jeffrey is the educator. Jeff is my head of development. I got 2 Jeffs and I got 2 Jims. I just got a whole lot of G's in here. Let's take a look at gold for a second. So this is gold. Okay. And gold has some pretty big runs. Just depends on the the actual trading aspect of this, and just depends on the market. You get some pretty big days on gold, but then you get very, very small losses. So, gold can be very, very sexy when it moves. Remember, gold is a commodity. Okay, gold is a commodity, but the Nasdaq is definitely the big player. The Nasdaq is definitely the big player. So if I want to look at stats across his portfolio, I'm going to take out gold for a second. Just look at the NQ. Okay. The NQ is a 1.8 profit factor with 207. I just can't get over that. Like that's just so good. It's just so good, right? Like he's risking $1,000 a trade, right? To take 60K with a $6,000 drawdown in 5 weeks. I don't know about you guys, but that's nuts. So, like when you start adding 100 trades to your sample size, right? And you see the profit factor staying above 1.5. The hardest thing I've learned over the last 5 or 7 years of building systems is when you start adding 100 buckets of trades, your profit factor drops, right? And sometimes you want to try to keep it over 2 or keep it over 3, but then the sample size goes down to like 20, 30 trades, and this is just curve fitting. I don't care about this. This means nothing. I want big data, because if I want to run this thoroughly, right? And you don't need to yeah, we ran it back and forward. Yeah, we ran it back and forward. Yes. So that's the key. So I think the primary is going to be the NASDAQ. Most people here are going to trade an index market, right? So this is the 2 favorable templates. So this is Jeff's template on the NASDAQ, and this is my template on the NASDAQ. The only difference between the 2 of us, I think Jeff is risking a little bit more per trade on his. Make sense? Give me a yes if that makes sense. The balance is good too, yes. I get emails all the time from traders. They say, "Hey, Sean, like, you got so many strategies and so many indicators, and like, I want to run an algo, and I just want to trade one market, and I just want to run a prop firm. I just want to work. I just want to get paid. I want to get past a prop firm, whatever, right?" It's hard for me to tell a trader, like, you should trade this way or you should trade that way. You should, like everybody's going to do what they're going to do. Like some traders like trend trading, some traders like reversals, some traders like breakouts, whatever. This is none of that. This is ultimately, you've got price action, you've got direction, you wait for sweeps of lows and highs, and you enter the trades. And if I were to kind of take a new trader all the way up to an advanced trader, I would put everybody into this because everybody can understand it. It's easy. You load the chart, you have 2 EMAs, done. Like you just wait for the market to hit the lows and highs, you reverse the trade, you let the software do the stops and targets, and done. I would entertain maybe having a cutoff, right? Like maybe you have $1,000 a day target or a $2,000 a day, because a lot of times what we see is that the market's going to run quickly and your trends are going to happen within the first hour to 2 hours of the day. And we see most of that activity. Like if you look at here, and I think this is very important data. I think if you're going to really trade strategy, okay, you take a look at the size. So let's just take a look at this for a second. Okay, let's really, really dial this down. Okay, so look at the expectancy, like the average P&L and the time of day. So realistically, this, even though this had the most amount of trades, it really wasn't ideal. right? Like it was okay. Now I could have cut this out, but you're going to see really good results. Like take a look at the meat here. Even I would probably go here. Like you're getting a lot of trades off the open the first 30 minutes, but your overall average P&L is less, which makes sense. You got news, you got fundamentals, you got all that. And then the market trades down. So even 10:30 to noon, you're still getting a ton of data with way better expectancy. Does everybody understand that? You guys see the difference on that? Like if you're going to be just running the system and you're going to turn it on, you could be trading the one and done in Jeffrey's room, and you could be trading whatever else you're doing off the open and all that cool shit. But then the data supports this. Yeah, you would lose 150 trades, but we already had 300. So in a month, if you have 1 month and you have 150 trades, like that's a lot of trades every week, guys. Like that's still a very, very large sample size for a day trader on the NASDAQ, right? So let's do that. Let's go in. Okay, let's go see how that works. Let's go in and take the period. Let's cut it out. So Jeff, if I'm going to do this, we're going to do the entry time. I'm going to block the first. So that would mean we're entering at 10 or we're entering at 10:30 onward. We're going to block this. We're going to run it from 10:30 to 12:30. Yeah, that's what we're going to do. We're going to take that out. Let's take a look at this. So we're going to run that. I think Jeff's here. So we're going to go into the strategy and we're going to change the time controls. See how I'm going from 8:30 to 1? I think we're going to go 10:30 to 12:30. Okay. Yeah. And let's just run that. And let's just see. And let's just change the money management. So if you want to go into money management or entries, I'm running 2 contracts, right? You know, 2 contracts on the NQ might be a bit rich for somebody, right? Let's just put 1 lots because most traders are going to start with 1 lots on the NASDAQ, right? Like, let's just see how that unfolds, right? Let's run it. Okay, let's just keep the same sample size. Just run that here and let's just run that back test. I'm just going to see. I might have had to start at 10 or 10:30. I'd have to check. Just can't remember the way that the software counts the fills on that. But let's just take a look. I'm just doing 1 contract on the NQ running this algo. Look at that. Profit factor went to 2. We still have over 100 trades in 5 weeks. Anything less than 100 trades is when I start to question whether or not the sample size is in variables, right? But like look at that, right? Like it's 7,000 to my drawdown is 1,500. Like if you're trading a 50K account, your max drawdown was 1,400. With prop shop, your max drawdown is 3K. Ding, 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 ding. Winner, winner, chicken dinner. Meets the mandate of prop firm rules, even on the small accounts. On a mini, you don't need to do that. But let's go into it. Right now, you can see here that good trades. This is just trading, just less time. You're still seeing that sample size. Now you could go in and you could say, I want to open it up maybe a little bit earlier, right? 10:30, right? Right. But you might be cutting out some of the way that those close. So if we want to go back and open up to 10, maybe you don't want to trade the open. So let's just go back and see how it does. Let's just go back and take a look. Let's go in and take a look at this. Let's go in and I'll show you. This is how you can go in and change the setups. So quick to do this. Just go in and I'm going to run it from 10. All right, just do that. Finish, run the back test. Trading 1 lots. You guys can see like some traders want to wait for 30 minutes off the open. Some of you want to trade the open. You can, no problem. Right? We'll go through this and I'll show you the reason why I'm saying this is because there's so many trades on the strategy in the morning session that you don't even have to worry about not rushing it, right? Still profit factor dropped a little bit, right? But now you're getting a lot of that open market push. You see that? We're getting a lot of that first 30-minute trends of the day. You see where I'm going with this? Now, let's say you don't like to trade the pre-market. Let's say you only want to trade, right, market open, which makes sense. A lot of traders don't trade pre-market. A lot of traders want to wait for the market to open. No problem. Let's go in here and take a look at what it looks like just off the open. All right, let's go here. Let's go 9:30 to 12. Right, we're not trading the afternoon session, right? You can go into that. And let's take a look. Finish. Run that test. Can everybody hear me okay? David said the audio is breaking up. Sorry about that. So let's give it a second. Now we're going to give you these templates so you don't have to worry about rebuilding anything. They're all on the same bar types. We never change the fractals. We never change any of the bar types. Like it's all 40 ticks and etc. Right? Take a look at that. By just opening up the US Open, look at the size of those winning days. That's the key, right? Bigger profits. Okay, bigger profits, less losses. So you can see that it's not so much about the average P&L that you may want to question. It's about our, okay, here. You can see here that even though that it's still the average P&L is a little less, it still opens up much bigger activity. Does that make sense? And that makes sense because you may be entering trades, right? Let's just go to the hour of the day and you can just see where, this is the meat of it, right? 9, 10, 11, 12, right? And to me, it's just a no-brainer, right? Like it's a no-brainer as to why you would want to do this. It's very few systems will give you this much activity in the morning session for you to be able to trade like that, and with that much sample size, that's just market open to lunchtime, right? If you're looking at it from market open to lunchtime, now you could cut out 12:30. There's only 2 trades, right? But you guys get the point, right? You guys understand that? So I think I've done my part here in showing you why I feel so strongly about this strategy. There's very few systems that I will go into so much detail on because I just know the data supports what we're doing. But like very few, like this is 1 lots. Remember, we switched the position sizing down to 1 lots, right? And the average here. So your low days are 500, your medium days are 1,000, your big days are $1,500 days. And that's important, right? Trading 1 contract, come on. That's pretty scalable, right? Super sexy. And the reason I like going down to realism, I'm trying to be real, right? No BS. Nobody's trading 5 lots on the NASDAQ without having a hernia or an ulcer, right? Like anything over a few full minis on the NQ is going to make you sweat a little bit, right? And so when you can dial down true data, 1 contract or 10 micros, that becomes something that most people can get behind. Do you understand what I mean? Give me a yes that you guys would agree with that. Because a lot of times you'll see people boost how much money you could make, but you're not really trading that much size, or you're not really going to relate that to your real life scenario, right? Especially if you're a prop trader, right? Not too many people are going in and putting 5 minis of the NASDAQ on every trade, right? So I try to make it so that you guys can actually resonate with it, and it's not just some hocus pocus, right? Great. So Jim, do we have a winner?
We do. The winner is Jaron Coles. Congratulations. You are the big winner. Everybody congratulate Jaron.
Damn, Jaron's got Lady Luck on his side.
There
Wow.
you
Winner,
go.
winner. Winner, winner, chicken dinner.
Congratulations. Enjoy it.
Good job, Jaron. Lady Luck's on your side, mate. You can always donate it if you want. If you don't really want it, you can give it to somebody else in here, but pretty assuming that's not the case. I believe I have commissions in here. I believe I have commissions in here. I do have commissions. Yeah, I do have commissions. That's after commissions. Yeah. 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 And that's using AMP's commission structure because we have it programmed based off AMP futures as structure. Yeah. So we come in here, you go to advance. The actual commission structure on this is $2 round turn per side, $4 round turn. Yeah. If you're trading with AMP futures. Yeah. I mean, every broker is different, but we're just pulling it off AMP's contract sizing. Yeah. Fantastic. So what I'm going to do is we're going to get into this. Did you guys enjoy that? You guys enjoy the presentation a little bit? For those of you that don't know, this is a marketplace product. So under the marketplace, there's a bunch of free stuff. So you guys can get access to all the free tools. And I mean, this is a premium algo. So if you click on premium algos, you're going to click here. You're going to see that this is the actual sweeper algo here. And so ultimately, this is what this software is, right? So this is sweeper algo. And so ultimately, if you come in here, you can get access to all the free stuff too. So like, don't forget about all the free tools you can download. It's all free. What you should be doing is checking out our community because we have a community of thousands of traders in here posting trades, and people are going to be posting stuff in here. We have stuff on strategies and quants and algos and all that fun stuff, right? So you guys can go through here and go through all this and enjoy it. What you really want to do is go to the YouTube. I'm going to put the YouTube in the chat box here for a second, because anybody that's new to Tickblaze or anybody that's new to strategies and stuff, you want to know the tools. You want to know everything. And there it is. So if you go down, we post videos for all the algos here. So this is basically, we'll put this one here once it's recorded. The AMAs are always private for customers only. And then down here, these are all the free stuff. So these are free tools you can watch. But if you're new to the platform and you haven't really got Tickblaze under your belt yet, this is where you want to go. You want to learn the manual side of the platform, which is discretionary traders. And this is all the strategy. So all the algo traders, this is the playlist. So this is really easy, guys. They're really 5-10 minute videos. There's nothing crazy here. But take advantage of this. And then if you're looking to connect to prop firms and stuff, all the rest of the videos are there. But that's the basic videos that you want to be taking advantage of. Okay. Deliver this. This is a stand-up presentation with everybody you're helping. Thanks, Pete. Thanks, Jim. Thanks, Jeff Z and the dev team over there for always doing what they do best. We can't do this without you guys. Thanks, Jeffrey, for running the trading room and helping all of the traders ongoing. And hopefully everybody's valuing what we're doing here. I mean, we've got a lot of stuff going on, and hopefully you guys can enjoy that. Fantastic. Traders, thanks for being here. Enjoy the rest of your evening, and we'll see all of you sweeper traders in the morning, right? Be there or be square. It's going to be exciting, guys. So Jeffrey, can you take Todd's phone number here? He answered yes, but I forgot to put the phone number.
Sure, I got it.
Thanks, guys. All right, guys, enjoy the rest of your evening. Remember, take a break from the screens, right? You don't become a zombie to the Matrix. Enjoy it. Take care, traders. Have a fantastic evening.